Alright guys, my name is Shervin. Welcome to my channel. In this video, we're going to talk about the best dividend stocks that you can invest into inside your RRSP. Now, the RRSP, or the Registered Retirement Savings Plan, is essentially a government-registered tax-sheltered account where all your investments are able to grow tax-free. This means that if you invest into dividend stocks within your RRSP, you won't have to pay any taxes on the dividends that you receive from your investments. Now, on top of this, the RRSP is the only investment account in Canada where you don't have to pay any US withholding taxes on any US investments that you hold in this account. This means that any dividend stocks that you want to invest into from the US market, you have to be holding in this account in order to minimize the amount of taxes that you have to pay on your investments. Now, if you watch till the end of this video, I'm going to walk you through the best US dividend stocks that you can invest into inside your RRSP for maximum amount of growth possible. So make sure to watch till the end to find out what these are, how much they return on your money, and which ones you should be investing into and which ones you shouldn't be investing into, depending on how much you're willing to risk on your investments. Now, all that I ask for in return is that if you enjoy this video, make sure to smash the like button down below for the YouTube algorithm. It only takes you a second to do, but it helps me out a lot when it comes to other people finding my videos on YouTube and learning how to improve their finances. So I really appreciate your support. Now, with all that said and out of the way, let's talk about the first US dividend stock that we're going to talk about, and that is Abbvie. Now, Abbvie is an American pharmaceutical company that was founded back in 2013 and has since then shown tremendous growth. In fact, over the 9 years that the company has been around, the shares of the company have more than quadrupled in worth, which is absolutely insane for a dividend stock. Now, of course, in addition to the promising growth, this stock also offers a 4.15% dividend yield as well. Now, even though there are a ton of upsides with this stock, there's also one main downside as well, and that is the fact that over prolonged periods of time, this stock has shown downswings as well. Now, of course, the overall trend of the stock price has been massively positive, but this does point to the fact that there could be further downswings in the future of the company. So overall, Abbvie is a great investment, but just keep in mind that there could be a lot of turbulent times ahead with this investment. Now, next up, we have Universal Corporations, which is one of the leading tobacco companies in the world. Now, when it comes to the stock price, this stock is extremely turbulent, and it keeps going up and down at a massive rate. But on the bright side, they offer investors 5.46% dividend yield, and as well as that, even though there have been a lot of ups and downs with this stock, over the past 10 years, it has still shown a positive trend of 24%. Now, this is not incredible growth by any stretch, but it does show that money invested into the stocks of this company will at least retain its value against the inflation. Not to mention, on top of that, you're getting a high dividend yield on a regular basis. So this one is not one to invest into for the growth purposes, but the fact that it provides a high dividend yield of 5.46% as well as still retaining its value over time makes it a worthy investment. Next up, we have CocaCola, which is probably one of the most popular companies in the world. Now, the great thing about investing into Coca-Cola is that it is one of those combo stocks that has a decent amount of growth as well as a decent amount of dividends coming in every single quarter. Now, granted, this is not going to be the highest rates you see in either category, but the fact that you have both of them working together and compounding each other's growth makes this a really good investment. Now, over the past 10 years, Coca-Cola has seen an 83% growth rate. In fact, today, the price of a Coca-Cola stock is at its all-time high. And of course, 83% over 10 years, even though it's not as high as some prime growth stocks such as Apple and Amazon, it is still incredible for a dividend stock. Now, Coca-Cola offers a 2.74% dividend yield, which again is not as high as a bunch of other dividend stocks, but again, we have a compounding effect between the dividends and the growth of the stock as a whole. But what's the best selling point about Coca-Cola is that it is an incredibly safe investment. In fact, the only times the value of the stock has gone down over a long period of time has been due to market crashes and nothing to do with the Coca-Cola brand itself. So the fact that it's a safe investment, the fact that it has a decent enough growth rate over a long period of time, and the fact that it provides a decent amount of dividends makes this a great investment for anyone. Now, last but not least, we have Duke Energy, which is an American natural gas and electrical power company. Now, similar to Coca-Cola, Duke Energy is also a relatively safe investment as it has also only really gone down in value over a prolonged period of time due to market crashes and nothing else. And again, similar to Coca-Cola, it is one of those combo stocks where it has a decent enough dividend rate and a decent enough growth rate for them to combine with each other. Now, over the past 10 years, Duke Energy has grown about 63% in price, which is slightly lower than Coca-Cola, but in turn, it offers slightly higher dividends compared to Coca-Cola, where this one offers 3.79% a year as your dividend yield. So again, this one is also a good investment as the dividend yield and the growth rate can combine with each other to create a compounding effect with your investments. But now that you know what to invest into in your RRSP, it is also important to know a couple of other things about this account. First of all, you have a limited amount of contribution room in your RRSP, and you need to check your CRA account to see how much you have left. Now, every single year, 18% of your salary is added to your RRSP contribution room up to a maximum of $20,000 a year. This means that whatever your contribution room is right now, it's going to be a little bit more next year depending on your salary. So every single year you want to go to your CRA account and check to see how much contribution room you have left. Now, it is very important that you don't go over this number because if you do, you can be fined by the government for doing so. Now, once you put money into your RRSP account, you're not allowed to take anything out of it until after the age of 65 when you have retired. Now, there are some exceptions to this rule. For example, the first time you're buying a home, you're actually allowed to take money out of your RRSP to put it as your down payment. But in general, you're not allowed to take any money out until after you're 65. Now, once you turn 65, your RRSP turns into RRIF, which is short for Registered Retirement Income Fund. So essentially, after the age of 65, all your RRSP investments become your salary providers, and they keep giving you a salary based on how much you have saved up and how much you have coming in. So for example, if by the time you turn 65, let's say you have $1 million invested into dividend stocks inside your RRIF, and let's say on average you're getting about 5% from your dividends, that will mean that you're actually allowed to take out $50,000 every single year from your RRIF without ever running out of money because you're not touching any of the principal. Alright, so that's about it for this video. Hopefully you guys enjoyed that. Now, if you haven't subscribed to my channel yet, make sure to smash the subscribe button down below and join the community. I make 3 new videos a week on personal finance and investing, and by subscribing to the channel, you get to see all my new videos right as it comes out. Also, if you have any questions about any of the stuff that we talked about today, make sure to let me know in the comment sections down below where I always answer every single question that comes in. Alright, so that's about it, and as always, thank you so much for watching, and I will catch you in the next video. Cheers.